Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. Today's agenda, we'll go through a market update. I think Joe's going to go through the Fibonacci just to follow up. And then we'll get into the studies update. And if we have time, we'll have Sean go for about like 15, 20. So that's the plan right now. Let's get started. All right, so for market update overall, it's actually the same that it was last week. We had Russell in 2. SPX went into state 2 for one day and came right back after that big day yesterday. Overall in the market pulse, I think last week we were talking, this was like 29 and this was 34. So these both dropped. But we'll get into that analysis right now. Oops. Okay, so market pulse, state 1, state 8. You can see we dropped down around below 20, and it looks like it's starting the curve back up here. We had a pretty significant drop in new lows, which is pretty crazy. It went from 600 to 61. So that is our initial indication, as long as it doesn't rebound, that things are looking all clear, I would say. As long as we don't have that big spike up again. It was sustained, it was building, and then all of a sudden, went down to the flat line level. So obviously keep your eye on that. If it stays down there, then all clear. Kind of coincides with, this starting to turn back up. So those two are looking bullish right now. And then the overall bullish bearish. We laid out, below 30, like 30% is kind of our oversold indicator. So we dropped down below that. Looks like it's curving up. So, if this continues, if the lows stay flat, and this starts building up, that should be indicates a nice run coming, a bullish run.
Hey, Josh.
Yep.
Am I missing something? I'm confused by the color coding at the bottom of the graph. Would you scroll down to the one I think was on the bottom that you were just looking at?
Yeah. The key is for some reason off. It's not indicating the proper color.
Okay.
We had told them about that. It's just kind of a reoccurring. Apparently that one works. Now, if you click off and on, then it's appropriate. Some kind of technical glitch with the system. Sorry about that.
Okay, as long as I understand it, I can work my way through it. Thank you.
Yeah, so there we go. That's the Delphian fix there. Click off, then click it back on, and it shows properly. So. Usually these are, below that 30, if we go back in time, if it stays below that 30, that's obviously bad things. You have little spike ups back here. In 2020, the Corona, where you had a big spike and then, just turned back down, kind of fell. Let's see, back here, this is back when they started raising rates. So it got below that, well below. It didn't even stop at around 30. And then 30 was kind of the resistance on the way up, and then once it cleared that 30, things were all clear. And you can see, if you mirror that with these lows. Once we went to flat line, let me drag this in here. you know, so, you got the bottom, it's not going to call it perfectly, but, we're at 9% bullish, crazy low. And then, you see those lows really tank, and then it just flatlined, and that's your all clear once we flatline there. So, for the current, current kind of crazy little atmosphere we're in, it's come down. Just keep an eye on that the next few days. See if it does flatline. See if we do turn up here. It could be a really good entry point, as long as those things keep moving up. I think we're somewhat flat today, but I was a little surprised. We were really trending higher here, and that was reflecting pretty well in the VIX, really building up. And then, what is it, a couple of days here, just like shot up, especially yesterday. So we went from 600, down to 60. So very, huge drop. See if it holds. So that's kind of the read on that right now. SPX just went into state one. You can see we went into state two for, I think, a day or two, maybe one day. And then it popped right back in with that huge up day. So now we got our base entry point for a state one entry. So, our typical pattern would be like this. And I think the last one followed that to a T. They don't all follow that, but that's the average of what happens. So we just kind of make that our base case. And I think the important things here are your entry level price. So most of the good bullish moves were staying above this entry price, which is our key support. You have support down here at the stop losses, and I think your first level, you just want to stay above that entry price, and then you'll run up into your 3 levels of resistance here. So you usually run up here, get some support, run back up, do the average move, and then turn over. So that's the average. So right now, just kind of watch that entry price, staying above that. I think S&P's flat today. So let's look at the 50-day. 50-day, oh, sorry, that's SPY. You can use SPY too, same thing. Sometimes it's easier. So 4552. So that's pretty much below the stop losses. Your 50-day SMA. So I mean, obviously nice. Pretty much was like testing. We closed below here. The 50-day popped above. Barely closed below, and then next day up, and then we shot up. Real big move yesterday. So 50-day, support levels still intact. So that's obviously a key level. So, first off, you got this entry price, you got your stop losses, and then, right below that's your 50-day SMA. So that's your support levels, and you got your resistance there to the top side. Okay, let's look at the Russell. Obviously a good sign, when you have the market pulse lows, getting floored, things looking like they're turning, from a currently oversold condition, and SPX going into state one. Our typical trade here for Russell, we look for state two, target 3 met. That's our favorite trade out there. So you can see it closed well below, popped above, and that was, tested that support the next day, tested it there, the bottom, which was 21, call it 2140, and then, took off. So that's how we, a lot of our, a perfect segue into our studies results. This is like, our, one of our go-to trades here, state 2, target 3 met. We expect it to rebound. So this one's rebounding, looks like, probably should go back, stays above the entry, creep up towards those stop losses, should go back into state 1. I can't call it. A lot of the times, because the algorithm, it has to meet certain parameters, but just in the past, state 1s really haven't been good for, the Russell, excluding this last one. Everyone else was kind of like a top. So if it goes into state 1, just be a little leery of how this thing's been performing lately. It looks like 1, 2, 3, 4, 5, 6. 1 out of 6, did well. So yeah, so that's just kind of like a counter, at least how it's behaving recently. We are back in this long-term range that we have been monitoring for a long time. With the Russell, sorry, they're not straight. I'm trying to do the best I can with the mouse. So we're back in that range. This, I guess we call that a head fake now, since it came right back into it. So longer term, just monitor that range. Same thing with the 50-day on the SPX. Popped down below, then came back and tested it and proved it's still support. So I'd still say we're in this range as far as the Russell, until we get sustained, breakouts above it or below it. So that's the quick summary. I did want to pull up, Joe pulled out this great, article, very interesting. I'll post the link here, but basically, here's the kind of the, sorry, my neighbor's loud. Past 3 weeks, VIX has risen more than 20 from 15 to 18 over the same period. It's happened 6 times during the past month, so it's only happened twice before since 2017. So this, like, basically the market's going up and VIX is going up. And the last 2 times was when they raised rates and then the Corona virus. So this is the 3rd time. Yeah, I don't know. Very interesting. From what I saw, I'll post the link here. I appreciate Joe sharing it with me, pushing it out to the group, because I think it's worth at least your thoughts on it. So something to think about. I think VIX, what was VIX at? Yeah, we're still 20, still elevated. We're not down in the teens, but it did get up like in the 30s. And it, the last day it dropped a ton, but something to be wary of. Very interesting. Something, I guess that would be the caution. We're looking mostly bullish as far as the state modeling, the market pulse. So this would be that one kind of, okay, just be careful, make sure these things are turning, the lows stay flatlined, and then, it's all clear. But just something to bring up. So that's the quick market update. Open up the questions, comments.
Yeah, Josh, this is Dave. I usually wait to see somebody's going to chime in here, and nobody does. I wish people would. But on the, did want to comment on your SPY or SPX and your just getting into state 1 and how it usually goes up to target 1, drifts back and goes up and does that pretty regularly.
Yeah.
I would have to say I believe that's going to happen again pretty soon. The reason I say that, by the way, Lee, I didn't see Lee on here. He's got an interesting VIX theory that he's working on here so we've been talking a little bit during the week. But anyway, that's his, let him talk about that. But because the VIX is at 20, I want to make sure everybody that's on the call kind of understands like the rule of the 16s for VIX. Just real quick, 20 seconds, I'll tell you what it is. It's like when VIX is at 16, you can expect a 1% move in the S&P 500 every third day, 1% every third day when VIX is at 16. When it's at 32, that's like, then you can expect a 2% move every third day, and it's every third day. And it doesn't matter whether it's up or down, it's just movement that is what the VIX is. So we're at 20, right? So, you know, kind of like about 1.5% move every third day. Now we had the one big spike up that was on, I think it was on Friday, that hit 30, like you said, but it doesn't come right down really, really fast because it's like kind of every third day. I don't know whether Joe wants to ever talk about the black shoals, and I don't ever try to like understand that, but that's the rule of the 16s. So we're at 20, and why is it at 20? Well, we had, so this is the news part of why I think it's still at 20 is we had Biden say we'll keep the government running until somewhere in February, but we still haven't increased the debt ceiling. And until they do that, they're not going to actually be able to pass any more spending things until then. And so February is kind of like now a new end of the drop dead date kind of thing. So we'll see. So the Fed meeting next Wednesday, I think Wednesday and Thursday is the Fed meeting, and that'll be the December kind of like the bigger meeting, and they'll talk about what they're going to do about all this tapering. And VIX staying around 20, I think, is going to be until that meeting, or it's not going to drift too far down towards, back toward 15 until after that meeting, because that's a volatility event, right? In my opinion, anyway. So if they announce the tapering on your little graph of the where we're going to the target 1, 2, and 3 on the SPYs, I would be willing to bet it's going to start inching up towards target 1, right toward that 15th meeting, and then after that there'll be well, here's where we're going to taper faster, but we're not going to raise rates, and that'll be the digest. We've talked about that in this meeting a couple of times, whether it's the raising of the rates, interest rates, it's going to be the big negative thing for equities, not necessarily the pullback and the tapering. So that's all I expect to happen in this next meeting in the Fed, and that's why I think it'll start to come down right at that meeting, because people will panic and say, oh, they're going to taper faster, and then they'll realize 5, 7, a few days after that that's not really that big of a deal, because they're not going to raise rates right away, and then we'll have the resumption up back towards the targets 2 and 3, I think. Anyway, that's why I think you're going to be right on with your standard SPY SPX curve generation. I'll bet it holds. I'm betting lunch on it holding again this month. So that's my take on the VIX, and but it's best to be, while it's hanging around 20, it's best to be not, be careful, like you said.
Yeah.
That's all I'm saying. Same thing what we've been saying.
Yeah, not much difference. Good comments, Dave. I agree. Well said. So thank you. Anyone else have comments, questions? No. Joe, I wasn't sure if you had Fibonacci, if you want to talk that real quick, or.
Sure, Josh. Can you hear me okay?
Yeah.
Okay. How about if, can I do a quick?
Yeah.
Okay. Screen share. Just, yeah, real quick, a couple charts. Let's see, where the hell are they? They're hiding on me. Let's see.
There you go. We got it, Joe. Oh, Joe, you're muted.
Josh, there we go.
There, there we go.
A little better. Okay, so sorry about that. Anyway, just pulling up the chart that we looked at last week, the SPX. We had that October low. We had the 5 leg up. I don't know that I pointed out last week, and so basically, we got the top towards the end of November here, and then we got the pullback. And as I suggested last week, the Fibonacci's that I kind of pay attention to are the 382, the 0.5, and the 618. As it turns out, we pulled back right to just beyond 50%, and then off to the races we've gone. A couple things, and again, as I mentioned last week, this is art more than science, but we got the leg up from the bottom here to leg 1, leg 2 on the pullback, leg 3 all the way up here. And this pullback in leg 2 was just beyond 50% of leg 1. You don't always get that. But again, what I like about this is that it's a forward look. It's a level to anticipate. We had this long leg 3. We got a short pullback out of leg 3. And then we got that last leg 5. And then, away we go. Primary trend moves are 5 legs, 1, 2, 3, 4, 5. Pullbacks are typically 3, A, B, C. You could make a case for first leg down here, A, 1 day up, B, pull back to C, 50% retracement. And then, as we all know, it's been a rocket shot ever since. So I just wanted to kind of go through that one more time. The other thing I want to point out is you got to know your market.
Joe, before you leave
Yeah,
that,
Dave.
could you go back to what you just had? I'm sorry for jumping all over you. I apologize for that, but could you do me a favor and show? I have about 3 questions on Fibonacci, real quick. There's Fibonacci retracements and extensions. And I'm not sure whether I should be drawing the actual setting up of the view that you have there, the blue and green view there, whether to go from the top to the bottom or the bottom to the top when you're generating that. Could you go over that for us real quick, and whether it's the top or the bottom of the candles when you're going from the top to the bottom or the bottom to the top? Kind of thing?
Sure, happy to do that. And as I mentioned last week, I like to take the intradays. So we got the shadows on the candles. I love the candlestick charts too, because I just think they pop. But on the leg up, basically you're taking that bottom October low and, taking the distance between that point and then the high. In this case, it was really the case for the 3 major averages. You had a pretty clear 5 leg up, all right? And you mentioned extensions, and you can get lost in all this. I do like to try to keep it simple. Those extensions, well, the tenets of Elliott wave, or the 3rd leg, is supposed to be the strongest and longest, the most breadth, the longest distance. But as you point out, Dave, there are extensions, and you can take the length of leg 1, and then when you get into a 5-leg extension here at the top, you can take that leg, the distance of it, and start all kinds of numbers: 1.382, 1.5, 1.618, and add that number to the bottom of leg 4 to give you an anticipated high. But if you break through those levels, then you have, more ratios. So that's why I say it's a lot of art more than science. And you can get carried away on and on and on, with the different extensions and ratios and things like that. So, in terms of distances, you're basically, I like to look at the longer term charts. see when the last major lows were, and then you just kind of, watch the market perform, to the upside, see that ideally fifth leg top, and then work your retracements to the downside. And the opposite would be true for a pullback. You would take that top, go down to your new leg. And actually the Russell 2000 right now, as Josh was pulling up that chart, I mean, as we know and have talked about for almost a year, that thing went sideways, and then, we got new highs, turned out to be a false break, and down we went. It wouldn't be a bad idea to take the recent high in RUT, which I think was around 2,400, take the recent low, and then run your retracements back to the upside to see kind of how strong the Russell may be going forward. That may, if we can get through the 618 retracements there, that may be some indication that maybe the market's ready for another upside run.
That's really good. I was going to ask if you could actually do that, or if you or Josh could do that. I don't know who's got control over the in Delphian. Just to go through how the mechanics within the platform of how you got that on the screen, those retracements on the screen.
Sure, and then I'll do this. Let's see. So, you go to charts.
Yeah, go slowly.
And,
Thanks.
then we've got our left-hand columns, and this is going to change in the new platform. But you've got the little icon here, which you have to hit this little gizmo that we specialize in. Hit that gizmo, you'll get the Fibonacci numbers here, and then. And this is it. You just hit your, here's your top point. So you want to hit 1 point there. You take that line straight across to the high, and then you pull down to that low to get your retracements. And that's the mechanics of it.
Yeah, 3 clicks.
Bingo. Yeah, 3 points. 1, 2, 3. Pull it down, and there are your retracements.
Thank you.
So you're welcome. Just the other thing I wanted to point out quickly, because I want to give Josh has a lot to talk about with his findings on the daily trades. Just and it's common sense, but know your markets. This happens to be a chart of the Dow. Over that same period that we're looking at SPX, the NASDAQ chart really mirrored SPX quite a bit. Here are your October lows in the Dow. You got your leg up 1, pullback 2, leg 3, not quite as long, real short pullback in 4, and then your 5th leg up top here. We then got a downside, sell-off in Dow. But what's considerably different in here versus NASDAQ and SPX, the Dow pulled back almost all the way to the October lows. Okay, so if you're using Dow as your primary focus, you get through that 50% 618 retracement, you may say, hey, I don't like the looks of this, but that's where going 2 other indices at the same time and just seeing whether they're holding different retracements might give you insights as to how you want to approach the market. But point here, know the market you're trading. So, Josh, let me get it back to you and Sean. Probably took a little too much time and all you have to offer, but we'll continue this conversation in the weeks ahead.
Yeah, sounds good.
Joe, before you go, can I ask a question?
Certainly.
Do you use Fibonacci for the extensions, say off a line of support, to see how, just to measure the Fibonacci numbers on a rise? Instead of going from the top down, go from the bottom up.
And do I use them? I'm sorry, I didn't understand.
Instead of doing the retracement,
Yeah.
just doing the reverse, going from the bottom up, based on the previous, from the low to the previous high, or, the previous, the previous high closest in history, I should say, to give you a Fibonacci number on a projected rise.
Yes. And that's kind of what I was referring to in the Russell chart, which, depending on how far we run, may give us insights into how strong the market's going to be going forward. Here we go, just real quick on the Russell. So you can see we're just starting to get up into the 3 days retracement. 2300 is going to be, if we get up over this level up in here, I guess what's 2430-ish, I'd start to feel pretty good about probably the overall market. So
Yeah, I was wondering, about reversing instead of like that's going from the 0 line at the resistance level, the top down, and I was thinking about going the other way, the 0 at the support line, heading back up.
yeah, I don't. I'm not crystal clear, so.
Well, I agree. It is Elliott wave is art form, because if you can be into the 5th wave, and then once it extends beyond that, it can break the pattern, and then it's difficult to figure out sometimes where you are, and then it also depends on your time frame, because if you go down into different time frames, it's a fractal, so you'll find within within like the yearly chart, you go down to a lower time frame chart, and you'll find smaller waves, Elliott waves in that. So it's I think that's important too, to be consistent, in your time frame. Do you agree?
I do, and
Yeah.
We both mentioned this idea of art over science. To me, it's always a forward look in a particular stock or index, as for basically an entry or exit point. That's really why I use these levels, period.
Yeah.
I honestly don't like to get into, the extensions too much. It's really kind of just looking at, major support and resistance levels, with trend lines and things like that, seeing if they match up with Fibonacci, and now, of course, the Delphian tools on top of that.
Yeah, and confirmation indicators like your candlestick patterns and things like that, to look for those turning points. So. Cool, thank you.
Yep. So Josh, I'm taking up your time. My apologies.
No, it's fine.
I'll turn it back to you.
All right. Okay, so we changed the format a little bit. So this is studies. Here we do a quarterly update now. So this is year to date through November 30th. It's a nice, right? Interesting day to pick. Obviously, market had been very volatile going into there. So, so what we did, let's kind of explain this. So, we have our different strategies here: Bollinger Band, 1 year, 5 year, 10%, Keltner pullback, a deep pullback, 1 year deep pullback, and then a bottom. So, the other kind of note here, we started using the new bull put strategy on 9/27. So all these bull put trades, these old ones, we didn't initiate any new trades on that since September 26th, or the day before there, that was a weekend. And then, so these are all the results for 9/27 going forward. So just kind of explain what we're doing here, the different columns. So we only have two strategies, the bull call and the bull put. Going forward, we won't have this old bull put, obviously, but we just, because we've been tracking it all year, I just included it here. So as far as these columns, so we have the strategies, and then basically we have like total return on risk. So what we're doing there is just trying to find how much we're making off of what we put in. So that takes into account the total profit. So total profit will be our closed trades, plus or minus our open trades. So this is the overall, and then we wanted to break out this closed trades because like if we have 10 active trades and it's a down day, or down a couple of days, you could see here we're down 4,000 on what our 10 open trades, but so far we have 54,000 based off an 88% win rate over the year. Here we have like 99, but we're showing down because of that day or those couple of kind of pullback days. So I just wanted to make that clear. Hopefully it's crystal clear to you people, to everyone. Is there any questions on that? This open trade profit corresponds to this column, the open trades, and then the closed trades. We're only counting win losses for things that have closed. Before we just kind of threw everything together. The total profit incorporates everything. So, and that's what these numbers per trade, risk, total return are all based off of total profit. So is there any questions about this open? This is kind of like the new one here. The profit, is that clear for everyone or anyone unclear on that?
Yeah, Josh, I'm not exactly, so total profit are all the ones that are open and closed.
Yeah.
At that point of time.
Yeah.
And your total profit that are closed is the closed.
No, total profit. So yeah, total profits, both of these combined. So you're adding these two columns.
Okay.
This is all the closed trades up until, through 30th of November. And these are the open trades. So you can see we had, 115 total trades, 101 and 14. And then we have 10 open trades that are currently down on that day. So the total profit combines both those, the closed and the open.
Okay. You don't have a column for profit and loss percent, do you?
What's that?
You don't have like a column for profit and loss? Like you from what you invested, you made 20% gain or 30% gain?
That's this column, total return on risk. Yeah. That's the total return on the whatever you risk.
As of right now with all your trades?
Mm-hmm. Including open trades.
Okay.
Yeah, so you can see like this one doesn't look as good, right? The new bull put, right, on this 10%. Because we had, it's 8-0 for closed trades, but there's 7 that were open on the 30th. So if we go look at that, right? if we go back on like the 30th. So we can see, we have open trades that are brand new here. We have, one kind of big loser. I don't think it's a loser anymore, but so these are the open trades. So we got a big loss here, and then our closed trades here, 6,000. So as we go through, so the issue is, okay, each day, these values are going to change, and then I get new ones put in there. So I got 3 more on the first, and then you can see it's just like a moving target on these. But overall, things, especially after yesterday, cleared out a lot of those ones that were losers before. So you can see, the portfolio value just keep going up and up. And then, so now we only have 1, 2, 3, 4 of those trades left that of the original 7 on this, but we have basically two new trades, and a couple of new trades already closed out. So, so we just want to try and show, okay, here's a snapshot on what's open, but what really matters is the close, like what is actually closed over time, because a lot of these, even, like we have till February, we have till March on this, DICs. We have a lot of time, so, but that's how we wanted to break it out on those. Does that make sense?
Yeah. The only thing I noticed was that some of them are high risk, $8,000.
Yeah.
I don't know how many other ones are in that same scenario. Like we wouldn't do that for our normal trades for the bull runners, but yet,
Yeah, it's kind of indiscriminate, like this one, 19,000. It's all factored in. I mean, you can see ones like here, the average risk per trade. So if you see one like this, or like this, that's, kind of what we would expect. You get some big ones in there, they'll skew up, the average risk per trade, where it should be like, anywhere from 15 to 2 grand. Like this one's 1,200. I think that's the lowest. But around 1,500 is kind of what it should average. So if we have a few big trades, obviously this one, the 10% had some big ones. This might have had 1 or 2 kind of big ones. But yeah, we haven't pulled those out and discriminated based off of max risk. I know we had been talking about it as far as the earnings, and we haven't decided. Because it's in the liquid list. I know this booking, I mean, it's huge. Like, but we're not adding any other criteria other than the studies. So yeah, I would refrain from trading that unless your average risk is 20 grand, Russ. So
Okay. Yeah.
Yeah.
And as a side note too, Josh, I think that's where that column C is a critical component, right? Column C gives you your return on your risk. So, that one trade design, you're taking more risk, right? But, your return on risk is really going to take both of those factors into play as well. So
Yeah.
I think that return on risk gives you a better number to analyze, I think. I mean, obviously you don't want to risk $20,000 on a trade, but that return on risk, I think, is able to compare apples to apples, right? Is that correct?
That's pretty much all the loss, right? At that point, 99,000, 10. So otherwise it's almost like flat without this thing. But I think it's probably come back. I don't even know where it's at now. It's come back a lot. So it's came back 6 grand, but still, I mean, it's dragging down everything else, but we haven't pulled those out as of yet. So something we can discuss on the team. It'd be the same discussion on, that we have for earnings, that one thing can, that one trade for, booking represents like 12 trades, for, these guys here. So it's not really fair. I'm not sure. It's a good point though, Russ. And I know we have the same issue with earnings, so we'll have to come to a resolution on what we do with these. But yeah, does that answer for the most part? your question?
Yeah. Have you done any analysis on the losers as far as why they kind of lost when normally we should be winning on them?
No. Well, if you can see, there's not a lot. I mean, the 1 year. Now I always tell you guys the 1 and 5 year. So the past couple of years, the 1 year has been better. But this year, the 5 years, 69 and 1 on the. So that's why I say 1 and 5. Because if it's not in here and there, same with it'll take. It'll be your best option for these trades, but no, I haven't done analysis on those. I mean, they're modeling better than what we designed, so I don't think I need to at this point.
Okay. Do you know which ones take into play for the state 2 target 3?
Yeah, 1 year, 5 year are both state 2 target 3. Keltner, that's state 2 target 2, and then this is state 2 target 1. So these two are the target 3, target 2, target 1.
Actually, it might be a nice idea if there's some way to like capture that within the description over there for, not necessarily for us, but for any other future people, for, users of Delphian, so that they get that correlation that the question was just asked about.
Yeah. I mean, we have a lot of work to do to have all, the needed information at your fingertips and not have to go to the web page, resources, studies, click on, we have a lot to work on for that new platform, but we'll be incorporating that so it's a lot easier, Any other questions so far? Okay.
This is Dave. If you've got more, I'll let you go. But if you are about to ready to wrap up, I was going to ask, or I was just going to ask, sort of add 2 more comments. But if you've got more stuff to go, I'll just wait. No worries.
Yeah, no, just kind of real quick, and then I'll let you go here. So if you see blanks, there's just no trades that were closed. So, Bollinger Band, 0, 0, 1 open trade on here. In a lot of the old bull puts, I think most of them have finished up, so they're done. This one has an open trade, but all the rest have closed out. Everything's closed. No more new trades, so they're all incorporated into the bull put. I think as far as everyone, looking at focusing on what's actually closed thus far, and not necessarily day-to-day swings, because most of these are down just based off of that day or a couple of days in the market. And I showed you at least for like the 10%, and it's come back. Those open trades have come back, and you've already had new ones open and close in that week period, that 1 week period. So they've already like 2 days are out for some of those trades. So I think, the thing to focus on is, okay, look at these numbers as far as the closed trades. I mean, like 4-0, I'm not really impressed, but when you're doing like bull calls, you're hitting 90% here. These 89, 99%. So 69 out of 70 trades. You have 6 open, but I mean, that's just, very difficult to replicate. Yeah, I don't know if we've seen a stronger year for studies, as long as we've been tracking them. We did whittle down the list. So, we're not doing long calls. We're not doing the stock. So we're just focusing on the 2 highest win rate strategies. So, I think the difference between the 2, you get a little better, the bull call will be a little more expensive, you can earn a little more profit versus the new bull put. The new bull put will typically close quicker than the bull call, for a little less profit. And, your win rate on the new bull put should be higher than the bull call just based off of where the break evens are on those, in general. So is anyone, I guess before Dave goes, are you guys trading these? Is anyone out there? I know Sudhir's not on a call today, but is anyone else out there, trading these, or at least, looking at them each day?
Yeah, I kind of trade on the 1 and 5 years that you always previously mentioned. So if I see those, I go ahead.
Yeah. Yeah, as long as it's in your risk, right?
Right.
Yeah. So if you did the 1 and 5 year, then you should be around that win rate. Typically. So yeah, there was a 1 and 5 year. Yeah, I was telling this was a couple of days ago. The ASML or whatever that came out a couple of days ago, a day or 2 ago, and it was up like 9% yesterday. So and that was a 1 and 5 year. So we didn't have many today. I think it was yesterday. Anyway, I'm not going to wait for that to load. Run short on time, but yeah, I think I've been telling you that for about 2 years. That's the I think the best trades. So if it's a 1 and 5 year.
Yeah, I was gonna say this is Sean too, Josh, and I do the same. I trade them as well. So if they match up in multiples, then I typically trade them personally as well, and I've seen good success with them. And what I do want to mention is obviously you have a lot of trades here, and you do a lot of work to track them all in the virtual portfolios. But I want everybody to know kind of what I do, and then they can maybe do the same, right? Is if you find a couple that you like, if you like the 1 year and 5 year together, create a virtual portfolio with that on there. And then when those trades come out, just track them in the virtual portfolio. We kind of have all these trades set up as like a blanket trade design, 25% profit, whatever the case may be, certain expirations, but you always have the flexibility to make those changes to match your trading strategy, your investment profile. So do that. Josh has done a lot of work comprising this particular sheet, but within all those trades, I think if you have a more stringent design that you want, you might be able to make those win rates a little bit better, right? Or maybe make your risk a little bit lower, whatever. It just depends on how you're wanting to trade it. But, by all means, I think adding these to your virtual portfolio and how you want to trade them, just gives you great insight of, again, how you would react to a down market like we had the other day. If that happens, how are you going to react to those trades? How would you react if your position is down, 40% or whatever it is, right? So, I would just say, just please, try to add these to a virtual portfolio and track them yourself, and just see how they work and see if it's something you'd want to trade.
Would it be a better trade if you see 2 combinations, like 1 year and a Keltner, or a Keltner and a Bollinger Band versus
For
individually?
For me, I typically, because I think Josh has mentioned, and Sudhir has mentioned before too, right? They show up, if the market's down, you usually get a lot of these that populate maybe in one day. So if I see a lot that populate in one day, that's what I try to do, is I try to find some that the same symbol might be scattered kind of across different studies. And if they are, then that might lead me to trade that one more so than just one that's by itself, right? I look at that win rate too and see, and then obviously I look at the risk as well, just to make sure it's within my risk profile. I try to look, since we are doing those bull puts, I want to make sure that, the risk I'm taking on versus how wide the spread is. I want to make sure that matches what I want to do as well. So, make sure all those factors line up. And if they do, then yeah, I'll typically do that. So first I try to find ones that kind of, are on, a variety of the study. If there's, 40 of them, I try to find one that might be across all of them, or not all of them, but you know what I mean, more than one. And then I try to take my analysis further from there.
Gotcha.
Josh.
Yeah. I was pointing up here, like, I agree. So obviously the 1 and 5 year, so this is ASML. So I would just kind of look at them like, okay, so 4, 10, and then it's also in Keltner, so it's like 15 and 0. I mean, I would just kind of add them together, figure out the win rate. So the bull put was the best, and the bull call was similar. I think it's had a lower win rate there. So I would just, okay, I'd go with the bull put. That's how I kind of look at it. Obviously, I think the key is the 1 and 5 year together. If the Keltner's also in there, I would just, I would generally add it in, and just back, okay, it's still showing good across the board. So good question, Russ. All right, Dave, what did you have?
Yeah, I wanted to answer one of your questions is, are people using this? And I have to say, yeah, I use it. I use them a lot. But here's I'm going to make a couple of comments and various other kind of forums that I participate in. I would have to say I get a feel for a lot of options traders have paralysis by over-analysis. And by that, let me try to explain that. I think a lot of people strive to like, well, knowing all and understanding all the different option strategies takes a lot of work and a lot of understanding and, a lot of art and some homework and stuff. But so people have a tendency to try to like, well, I'll learn one strategy and learn it well, then I'll learn another strategy, try to learn it well, and then I'll try to learn another strategy and add that to my repertoire. And typically that's not the best way to do it. My comment on your column C there, just, I look at that and my takeaway is that that's a really good column. And what it tells me without even looking at any number, any row of strategy, any strategy row, is that, hey, this is paying off about between 15 and 20%. But so those are good numbers, right? Those are good numbers. Now you cannot make that if you pick just 1 or 2 and you happen to pick not the right ones at the right time. So
Right.
Don't get hung up on that. That's kind of my point here. Sadir is a really good example. He does all of these strategies work by the numbers if you do a lot of trades with that strategy and follow the rules, right? Then you start to understand that strategy, whether it's working or not, right? You get a feel for that. As long as the conditions are similar every time you put the trade on, which you would follow if you use the Delphian rules as to, you're picking it because they're saying this is the right time for those rules to use this strategy. I'm not a good example for that in my portfolio because I've got multiple strategies usually working at the same time concurrently with a lot of my long share positions. So my portfolio tends to go up and down just as the S&P or as the things that correlate with the overall market goes, because that's where my long shares are. But I don't care about that as much as I care about the options that I'm using and how are my trades working out. If my trades are still working out really well, but I'm down because the market's down, I don't get upset with that as much. I mean, yeah, you always get upset when you have losses, right? But I mean, you can't worry about it for too long, and if you're going to stay in the game here. So I encourage folks to like, don't try to what's the best 2 combinations of this and that, because there's no right answer for all periods of time. Go with I don't say go with your gut, but I'd say follow this. You have a thing that comes up in the bottom of your emails, trade the plan, work the plan, follow the plan, trade the plan kind of thing. I would just say, work your strategy, know your strategy, follow the strategy. And there was I think it's kind of unfair to ask Josh or Sean to like, well, why are some things not working out or not? That's up to each and every one of us to look at our trades that aren't working out and why they're not working out. And if it's because you just didn't, something happened that you didn't foresee, and you thought the volatility was going up and it went down, but you realize, well, it did that because of something, but I probably made a good decision when I put the trade on, and the trade didn't work out. Don't worry about that one. Don't worry about that so much. So, I don't think it's a bad thing to pick a few, whenever things come up under a different strategy, go with it. Don't worry about it. Well, that's not my strategy that I'm trying to stick with now. I don't know, does that make sense? I mean, that's my feeling is, trade them. Don't try to not trade because you're not sure you don't have every perfect thing lining up to make the trade.
Yeah.
I'm just saying. That's my comment. Anyway, you guys are doing great, and it's like I pick whenever I see one of your alerts come up. A lot of times I'll already have a trade working. Like for example, I do a lot of calendar trades, so I preempt, like there are preemptive strikes on an earnings call a lot of times, right? So I look and say, oh, there's something, I just see AMD or Intel or something coming up on your, this is a alert kind of thing. I say, oh, geez, I actually have shares there. I could do something. I could do a trade there, and I usually do a trade because your alerts are confirmations on things that I already have working a lot of times.
Yeah.
I don't know if that makes sense or not, but that's the way I'm using Delphian. I'm not using it the way you probably like it, but it's working out for me. And I just like to comment that it's good. It's a good thing. Don't try to overanalyze everything. I guess, sorry for getting emotional about this, but I get a sense from not just from this group, from other groups. A lot of people have that same it's like, well, I'll try it, but everything's got to be right, and it's got to have all the rules right, and I got to always stick with this same set of rules. The rules have to match the conditions that exist, and they change from week to week and month to month. So I don't know if that helps or not, but I encourage people to follow your alerts when you can.
Yeah, I think part of the issue is there are a lot of trades here. So, I try and point you guys to the 1 in 5 year, at a minimum. But, as you can see, most of them are really good, performance. Like Keltner deep pullback is 42-1 on closed trades for the bulk calls. It's crazy. So, yeah, I mean, there's a lot. That's another thing. Dave brought up some excellent points. I mean, that's why we have, and Sean mentioned it earlier, that's why we have the virtual portfolio, because you don't want to, if you just want to dip your toe in there and see how things are going, that's how you do it. You can add these trades to your portfolio. It's real, you can get alerts as soon as they're met, the profit targets, and that's what I do. So it makes life a lot easier, and you can start tracking these and seeing how well they do. So, well, thank you, Dave. I guess Sean, you're gonna have to go next week. I'm sure you're
Yeah, no problem.
I'm sure you're crying. Yeah. So any last questions or comments? I'll post this to the share drive.
Dan here, just a comment. I think Dave was spot on with what he said. I can certainly relate to analysis paralysis. I have a tendency to do that. And for me, I'm trying to, rather than get, expert in one particular strategy, I'm the type of guy I need to know all of it, everything. And that's part of the analysis paralysis. And the other part that I struggle with it is the trying to predict where you think the market's going to be. You can't tell. For me, I say you can't tell what it's going to do tomorrow. Never mind next month or 60 days, 90 days down the road. That to me is always a challenge as well, especially in a volatile market, so then you have to pick a strategy for that, and so there's so many, it's so dynamic and so many different moving parts. That's where I find myself with the analysis paralysis,
Right.
So I appreciate what Dave said, because I certainly can relate to that.
Yeah, yeah, it did make a lot of sense. So,
Sean, are all these, or Josh, all these at 25%?
yeah, we got rid of the other stuff, so it's only 25%. Well, not the old bull puts, but the new ones are 25%. This is 25, this was 80. So going forward, we won't see these old, it'll just be bull call, bull put. Anyone else? All right, well, next week, Sean didn't get to talk, but he will next week. So we get the earnings plan rollout and results. So we're gonna be working hard, cranking out that earnings plan for you guys and have that all ready for you in a nice Christmas bow next week. All right. Okay, that's all we got. Thank you all. Everyone have a great day.
Okay.
Hey, you guys, great session.
See you next week.
Everybody.
Bye.